said, we will start off with talking about financial modeling. So what is financial modeling? To get you started, it is one of the most important skills for finance related profile. So if you aspire to work into investment banking, equity research, portfolio management, project finance, credit research, these kind of profiles, then financial modeling is one of the most important skill set for such profiles. Uh, so what is financial modeling? That is where we will start off with, and then we talk about the usage of financial modeling. We'll also tell you why to learn financial modeling, and then we'll also quickly talk about the why a separate course or a different course is required for a chartered accountant. Okay, so what is financial modeling? Financial model is a decision-making tool, right? The decision that you're trying to make with a financial model is whether to go ahead with a particular project or not. You're trying to maybe make a decision of what should be the valuation of a particular company or a particular business if you're trying to buy or sell the business, or what should be the valuation of a particular company if you are planning to buy shares of that particular company or sell shares of those particular company. So financial modeling helps you in making decision. It is not just about the business valuation, it also helps in evaluation. There are profiles like FP&A where they use financial modeling to look at the comparison which against the budgeted numbers and do the variance analysis. So there are various usage of financial models that we will come in the coming slides. But in essence, it is a tool that is used for business decision making. So what do we do in a financial model? If you see, there are broadly 4 steps involved in a financial model. The first step that you do with a financial model is look at some historical data. When you're doing it for a particular company, let's say trying to do a valuation of a particular company, then you will have to populate some bit of historical data. How much of historical data, that will depend on case to case basis. So first thing that is populate the historical data. However, if you are doing project model, which is a new project and you do not have any historical data for that particular project, you just directly go into the forecasting aspect. The next step towards the building a model is to analyze that historical data that you have built. Now, why is analysis of the historical data important? Is to get accustomed to that particular company, to get accustomed to the numbers and the various terminologies that is used by the company. It also helps you understand what is the financial health of the company at that particular point of time. So step 2 is to go with the analysis of the data. Step 3 is forecasting, right? So once you have looked at the historical data, did the analysis of the historical data, the next step which is important in the financial modeling stuff is to forecast. So you will forecast for 3 to 5 years or maybe more, depending on case to case basis, and then based on that finally do the valuation. So forecasting, what is important in forecasting is to understand the business before you actually start getting to forecasting. To understand the business, to understand the drivers or the key performance indicators for that particular business, and then forecast those business. We don't go ahead and forecast directly the revenue and the cost. We forecast some of the drivers which are related to the revenue and cost, and then go ahead with the revenue and cost themselves. So the third step is forecasting, and final step is the valuation or evaluation. So you will use obviously different techniques. So if you are evaluating a project model, you typically go with the NPV IRR kind of calculation. If you're trying to value a particular company and find out the share price of the company, then you typically go ahead with the DCF valuation or a relative valuation of the company. So this is what is in essence a financial model. The tool that we use for financial modeling, majority of the people across the world, the tool that they use is Excel. So with all the technology available and still evolving, still a lot of people just use Excel. I would say 99% of the people still using Excel to do the financial modeling. Like I said, there are various usage of financial modeling, right? Where do you generally use, in which kind of profile? Let's say if you want to invest, if you want to get into an investment banking profile, or if you are working in investment banking profile, so typically you do valuation of the company, right? So valuation of the company, to do the valuation of the company, whether you are doing a DCF valuation or relative valuation, some kind of model is always required. In equity research, definitely a full-blown financial model is required, where we try and find out the price of the company and then compare it with the current market price of the company. If you're working in a PVC kind of a profile, where you keep evaluating companies, so one of the key steps in evaluating the company is to understand the valuation of that company, and there again you would use a financial model to do the evaluation or the valuation of the company. For credit research, we do not do the valuation there, but even for credit research, what we do is a lot of forecasting. The first three steps are relevant of the financial model. As I said, the first three steps are relevant for the credit profile. The credit research or a credit analyst profile, there you go up to the forecasting of the cash flow and stop there. You do not go into the valuation part of it, but the model is still required to get to the future cash flow, and from there you understand whether the cash flow will be good enough to take care of the repayment requirement and the interest payment requirement. Project finance, again, when companies start off a new project, they have to, if they're looking for funding from the bank or from some other parties in form of debt or in form of equity, they always have to create a financial model and to show them what returns they will be getting, or whether the company is good enough to take care of their of the repayment requirement. So for showing up all these things, you still need the project finance model. In corporate finance, obviously you keep evaluating, you do capital budgeting, and a lot of other finance related financing or finance related decisions in a corporate finance role. And the model becomes important. For an FP&A profile, I've already spoken about, if you are doing financial planning analysis, one of the key profiles that as a chartered accountant you get target in a finance related profile is FP&A. And in FP&A you do budgeting, forecasting, and then the variance analysis. So here again you do not do the valuation, but the first couple of steps are very similar. So you see, the skills required in or one of the basic skill required in all these profile is financial modeling. So if you get started with financial modeling, you can get into, or at least try and get into such profile. Why you should learn financial modeling? Now this is something that obviously people ask us why we should learn financial modeling. To be very frank and straightforward, is that it is a key requirement that the companies are looking out for today, right? So if you look at profiles which are available in equity research, investment banking, portfolio management, project finance, credit research, they will always ask you as financial modeling as a key skill. So companies are asking for it. That is why you should learn it. It also provides you a competitive edge over others. Obviously, those who have not got financial modeling in their resume, then you have an advantage over them. And when you go for assuming that the qualification the other guy has is similar to yours, you would have a edge over the other guys. The third thing that a lot of chartered accountants tell us, is that when we aspire to go in finance, there is a lot of skepticism from the companies. Now they are ready to take for accounting and audit related profile, but as soon as we try and get into a finance related profile, the companies are always skeptical. So what you can do is add financial modeling to your resume, write those projects that you have done as a part of the financial modeling course into your resume, to showcase to the company that, you see, you are really interested in finance related profile, and that is why you've done the financial modeling course also, and you know about it. And during the interview, if you can talk about whatever you have learned in the course, then it will be a good thing. The financial modeling course would give you a similar kind of a learning that, let's say, 6 months to 9 months analyst will have. So you can call yourself saying that, okay, I've got about 1 year of experience in the related fields. So any profile which is asking for one plus or one year of experience, you can go ahead and apply with to those profile also, because you've learned financial modeling. So this was about why you should learn financial modeling. I could give you hundreds of reasons for doing financial modeling, but I would like to stick to the core ones that are there. This brings us to the next question as to why do we need an exclusive course for chartered accountants? Now, this is something that we have pondered on over the last about 8 to 10 years. So basically, I'm a chartered accountant with about 15 years of work experience and about 9 years of training experience. So I have experience of training into CFA, ACCA. I've trained a lot of people on financial modeling. So why do we need a separate course for chartered accountant? Now, to give you very simple insight on that is that if you look at a lot of course on financial modeling that is there, which start with basics of Excel, would get into accounting, and would get into finance, like teaching you NPV, IRR, time value of money, and all those things. Now, what we realize that as chartered accountants, this is what you already know, and we should not be spending time in teaching you again the same things. That is why at the start, when I said this is an exclusive course for chartered accountant, um, by this exclusivity we mean that any person who is good with Excel, accounting, and finance can take up this course, because we are not going to spend a lot of time in basics. So whatever time we save during this basic, because if you see, typically one third or one fifth, sorry, one third or even half of the course would be in the basics. So we don't go into that. Whatever time we save here, we use that time to go more deeper into the concepts related to valuation. Now, a lot of people would just touch base on the valuation and go, because they don't have enough time and time to just go deeper. So we will go much more deeper. We will also take up complex models rather than the basic models that are there, and would try to do more automation than a typical financial model would be done in any other class. Elsewhere, we also, whatever time we save, we also get into advanced concepts like M&A, LBO, and we also do FP&A model. Now, why these are important? These could be important, like an M&A LBO model could be important if you aspire to work into investment banking, right? A FP&A model could be helpful when you're going for a FP&A profile. So these are additional things that you will learn beyond a typical modeling and a valuation course in this course. Most of the course, even most of them will not cover this, and even if they cover, it will be basically touching base on that. We will go comparatively more deeper into this. Finally, here is the curriculum for the financial modeling course that is there. You can look at the course. What we are broadly covering up is um, uh, two things which are not written here. I will also like to add those things. We will cover advanced Excel. Okay, we will still cover a bit of Excel. We will go to offset, we'll go to array, we will go to dynamic charting, those kind of things. We will stick to the advanced functions in Excel. And after that advanced function, we also go into a session or two on ratio analysis. That is what is not written here, but that we will cover, because we think that is quite important and not everybody comes with that kind of a background. Beyond that, this is what we will cover. We will cover project finance model. We will go to equity model. Within the equity model, we will go for DCF and the relative valuation models that are there. So this is what we will cover. Beyond that, M&A, LBO, and FP&A, I have already told you about. So this is what will be covered in the course. The course is for about 40 to 50 hours. Classes are only on the weekends. Classes are only on the weekends. We would take about 5 to 6 weeks to complete the classes. 5 to 6 weeks to complete the classes. I will come up and take the questions. Give me a couple of minutes. 5 to 6 weekends, Saturday and Sunday, both we will have classes about 3 to 4 hours on Saturday, 3 to 4 hours on Sunday. So we will finish the course in about 1.5 months.